The stock market, although weak, is showing signs of life, but that doesn't mean anything really because cash is king, and fearing a recession, some investors seek income. For the record, Bloomberg now estimates a 38% chance the U.S. economy will go into a recession within the next year. And to deal with rising prices, some of us alter our budgets. We'll address the personal finance part in a second, but first, we'll update one of the most popular ways investors generate extra cash in their portfolios. The folks at Sure Dividend have updated their handy Dividend Aristocrats list. As you might recall, Dividend Aristocrats are S&P 500 stocks that have increased their dividend payouts every year for at least 25 consecutive years. It's nice to know you can rely on the dividends you receive to not only come consistently, but grow steadily over time, particularly if you plan on living off of them, totally or in part, now or in the future. It doesn't get much more reliable or consistent than the top 3 dividend aristocrats in terms of years of dividend increases. Dover Corp, Genuine Parts, and Procter & Gamble all have increased their dividends for 66 straight years. They're followed a close second by Emerson Electric at 65 years and 3M at 64 years. But a quick warning, dividend increases alone do not make a solid investment. Consider the following comparison. Over the last year, 3M is off 35%. This brings its dividend yield to roughly 4.6%. Doesn't make it a yield trap, however, you must weigh capital preservation in relation to stock price against the income you receive. Your timeline and faith in the stock price turning around soon enough ultimately dictates your decision in this situation. Meantime, Procter & Gamble has crushed it on both ends, making the decision to own the stock for growth and income much easier.